Well, it's tonight's top story. African Dawn Chief Executive Marius van Tonder is with us in the studio. Oh, Marius, single stock futures are great in theory. I had, being Chief Executive of MoneyWeb and a big shareholder in this company, a gentleman from Dealstream who's now infamous, the Russell Lee, came to see me and said, easy way to make money. Take your MoneyWeb shares, sell them on the market, take out single stock futures where you can gear up, and you've got the money that you get from your MoneyWeb shares, the capital, you can then go and spend on things that you like. And when your single stock futures go up, you get more money as well. So, in fact, you can't lose. Fortunately, I didn't go ahead with it. Unfortunately, you got the advice, you got the same story, but you did decide to go forward.
Yeah, luckily our exposure at the time wasn't that big. But the company as a whole, nearly a third of our shares were geared under single stocks belonging to other shareholders.
Your exposure is 100 million rand. I mean,
nowadays, yes.
Yeah.
It wasn't. It was quite small. It was 10 or 15 million at the time. But how the story came about, we were phoned by one of our big shareholders who told us that we realized that nearly a third of our shares were geared. Which we didn't, of course, because we don't watch the screen every day. And then we started, and he said his concern was that we're leaving ourselves open to short selling, especially because of the market meltdown that started in America and so on. So we started phoning the brokers to find out which of their clients geared their shares and if they want to sell those. And it was at the beginning of the downturn.
So it wasn't the directors, in fact, who've been punted?
No, directors had a very small portion of those shares. So we as directors, because we've been diluted over the years because of issues for cash when we made acquisitions and raised cash, we wanted to up our stake because 5 years ago when we listed on LTX, the director shareholding was close on 30% and it went down to about 12%. So we saw this as an opportunity to acquire a bigger stake in the company, because for us to buy 57 million shares in the market would have pushed the share price up to 6 rand or something like that.
Let's go back a little bit there. This share price of yours, African Dawn, was trading at 5 rand 30 in May.
Yes.
And over 5 rand as recently as September. It's now 2 rand 70.
Yeah.
So in that period, presumably all these people who were punting on your shares in the single stock futures, well, they could have lost up to 4 times the money that they'd put up as margin.
Yeah, they could have. I suppose there were quite a few people that burnt their fingers, that lost a lot of money.
It's a lot of money, because you're talking about a market cap of 1.2 billion, roughly down to 600 million.
That's right.
So there's 600 million in value that's lost by somebody. If you happen to be punting, I guess you get carried out in a stretcher.
Yeah, if all the shares were under single stocks, that would have been the effect, yes.
Why did you pay more than the current share price for this big chunk of shares that you bought in at 3 rand 58, according to Sense today, and the current share price is 2 rand 70?
Well, in order to do the deal, we had to form a conduit because there were obviously lots of small shareholders, and in conjunction with the brokers, all the shares were put into one pot, and that was transferred from that platform. And so at the time it was done, it took about 4 months to do this deal. The share price went down from then to where it is now. So the effective purchase price was the price as at more or less the end of October.
But 100 million is a lot of money even for a wealthy man like yourself. Where did you get it from? You don't have that kind of spare cash lying around.
Well, I was a big shareholder when we listed 5 years ago at 7 cents, and the price went, as you know, it went up by a few %. So
have you been selling some over this period?
I've been selling some shares. I'm a net buyer, but I have been selling some shares, and I've obviously earned bonuses and things because we've been growing earnings per share by more than 100% for 4 years in a row.
What is the business that you're doing that can take a share price from 7 cents to 5 rand?
We in finance, so mostly property development finance, and that's the core of our business. And then corporate finance, where we fund other listed companies for short-term cash flow, and deposits on housing, and then individuals we finance to put down deposits on houses.
Sounds risky, particularly property development.
Well, we've got the underlying asset as security, because in the low-cost and affordable housing market, most people don't have bonds on their houses. It's not like your middle and top-end housing market where there are other bonds.
How is it different to what Money Skills were doing?
I'm not sure what Money Skills. What are they doing?
They were doing bridging finance. They went into liquidation, and they were doing a similar thing where they were making a big turn by using bridging finance on property investments or property financial structures.
Yeah, I don't know why they then went under. Because you can see our results, what we're doing. So what we do is, obviously the underlying property is our security. We always take at least 200% cover on our exposure. That's why this current market proves our business model. There's no uptick in bad debts or any of that. So that's why we won't buy 358 for shares if we think that we're going to have bad results this year or next year. So we're quite bullish on that.
Maurice, who are your auditors?
Auditors Van Dijk and Associates are our auditors currently. They've been with us for 5 years. It's a medium-sized firm in Randburg. Yeah, it's not a huge, not one of the top 10 firms.
And how do you account for losses? When do you start bringing bad losses into your books as bad debts?
Well, what we do every 6 months, we have a relook at the provisions, and we start providing after 90 days, and after 180 days we fully provide for that. So in terms of IFRS, we can't over-provide like we used to do before. So we can't preempt it. We can only write off the actual bad debts. But if it's in arrears for more than 6 months, we provide. Although we've got the double cover, and then we recover.
For more than 6 months?
Yeah, for more than 6 months.
Have you seen any increase in bad debts?
No, not at all.
What do you put that down to? Because everybody else seems to have had a tough time.
The non-performing loans obviously went up last year, like everybody else, but actual bad debts not, because of the business model. Because of the double cover, we've got 225% cover for our exposure, of which at least half is fixed assets. So and we value assets exactly the same way than the bank. So we use the same valuators than the big four banks, and we take 80% of their valuation as a property value, and then we take other security. We take cession of shares, we take personal sureties, and most of our clients are bigger developers, listed companies. So we don't have the middle class individual small developer as our clients. Our clients are high profile developers.
Are you starting to pay dividends yet?
No, we would obviously like to, because especially now that we're also big shareholders, it will be nice. The only reason why we haven't paid dividends is because of the huge growth that we've seen over the every year we grow by hundreds of percentage points. So this year we won't focus on growth. We will maintain our book because our debtors book is now 1.2 billion. So we think we've reached critical mass. So it's probably the time now to start looking at dividends. So the only thing standing between us and dividends is the cost of capital, cost of working capital, to get that down, because we had to borrow expensive money in order to grow the debtors book. So we're trying to replace that this year with more affordable funding, and then we can pay dividends.
African Dawn Chief Executive Marius van Tonder, an amazing story from 7 cents to R5.30.